So first of all, I'll show you the A2 syllabus. The syllabus has been emailed to you. Okay, so I'm not giving a printout. It's like a booklet where only part of it is needed, right? So it has been emailed to you. So maybe if you want, you can take a copy of only the A2 syllabus content is there and paste it in your book. So I'll show you what you have to do there. This is this has been sent to you through email. Here, so you have seen here, this is your A-level content. Y'all can, you don't have to copy this, it's there in your mail. I'll just explain to you. So here, this is your A-level content. This is the financial accounting paper. See, first topic they have given is partnerships. This is what you have already done in AS level. So see what they have given: the goodwill adjustments, the capital account of partners, current account, changes in profit sharing ratio, introduction of a partner, retirement of a partner, dissolution of partnership. All these you have already done. So obviously I'm going to do questions relating to this in A2 also. Yeah, but you have already done this for AS level, right? So I'm not going to spend much time on this area. Then clubs and societies, that's the second topic. Have you heard of these club accounts? O levels you have done, right? So in addition to what you have done for O levels, there are 1 or 2 extra things that you have to learn in A2. Like there is accounting for this life membership and things like that. Those are additional stuff. So this also you have to learn in A2. Manufacturing have you done for O levels. That's the first topic you also started in school. Manufacturing. Yeah. You have done manufacturing account for O levels also. So that knowledge you need to have. You can't completely forget manufacturing account, but in addition to that, there are a few additional things that will be learned here in A2, right? So that is manufacturing. Limited companies have you done? Company accounts, your favorite topic, AS level. Yeah. See, now what I'm trying to say here, y'all are in advanced level, no? But what is the advanced level you see here? Nothing, no? Up to now, the first topic, the second topic, the third topic, limited company, everything what you have done. All what you have done only, yeah? Questions, yeah, the way they give, so that's application. But what you are learning is not like nothing extra, not too many things extra. So don't think A2 means, my God, we have to learn a lot of new things. No, few new things. So that's limited company. So again, in limited companies, you need to know how to account for these right issue, bonus issues, and company financial statements and everything. But the formats are slightly different. So up to all these topics are, you already have some knowledge, right? Then we go to this. Can you see what's given there? This is very, very important in A2, and this is where students find it a bit complex. Can you see? There's something called IAS 1, IAS 2, IAS 7, IAS 8. So many international accounting standards are there for you to learn, right? So that is, I would say, the new thing that you have to learn in A2, right? That is entirely like you have not done any of these before. I would say IAS 2, of course, you all have already done. Where? That's about inventories. Where did you learn about inventories? AS level, inventory valuation. Inventory should be valued at lower of cost of inventory valuation. So all these you have already done for AS level, right? So apart from that, all the other international accounting standards are all new accounting standards. So that you have to learn. Then there's something called ethics. That's all theory. Then there is external auditing, which is all theory. Then there's business purchase, mergers and acquisition. When you take over another business, how you prepare your financial statements. Then you have ratios. That's all for financial accounting. Okay. Then the management accounting topics are these. There's something called ABC, activity-based costing, standard costing, budgets and budgetary control, and investment appraisal. 4 topics in management accounting. So out of those 4 topics, anyway, 2 will surely come in your exam, right? Okay, so that is your syllabus. So this has been emailed to you. So maybe what you can do is take a copy from here. This A-level content from there, paste it in the front page of your book. So then as and when we finish each topic, you can put a tick and say that, okay, we are done, we are done, we are done. Then, end of the session whether everything is done or not, right? Okay. So, I'm not going to start with partnership clubs or manufacturing. I'm straight away going to start with company accounts. That's one of the big topics, and you already have the knowledge on company accounts. So I'm going to teach you all whatever the extra things that you need to learn, right? So, but whatever that written here is not clear for you, right? So, anyways, when you take a printout, you will be able to, right? Okay. So. This time actually A-level paper, it was out of 150. Like I would say more than 50% of the students, they didn't answer for like 30 marks, 40 marks. Yeah, they have left it blank. Majority of the students. It was that hard. I felt sorry for the student also. I don't know why examiner made it so hard for them. Like especially in a situation like that. Already our country is messed up, right? Yeah, our students especially, they won't be able to focus, yeah, because of everything what's happening around us. And then suddenly when they go to this paper, but I told them in advance. The day before the exam, I said that, yeah, that's the thing. So I told them before going to the exam itself, guys, paper is going to be extremely hard. Why did you say that? I told them because I know it's going to be very hard. I knew that because when I look at the trend, how the examiner is testing the question. For y'all, I'll tell you. For y'all, the thing is, there's no past paper for me to look at and tell how it's going to be, because y'all are facing the new syllabus, right? You wish. Yeah. No. Anyway, the thing is, when they went to the exam, I told them, look, paper is going to be extremely hard. Make up your mind for that, because if they were not expecting a hard paper, and if they suddenly go and realize, oh my God, what do we do with these questions? They will not like even attempt the paper. They'll just give up. So I told them in advance, okay, look, paper is going to be hard. Just do your best and try to answer as many questions as possible. I also told them that, you might not be able to answer for like 10 marks, 15 marks, 20 marks, 30 marks. It's okay. Because last time out of 150, 90 was A star. 90 was A star. So that means this time I would say, based on the paper, around 75 or 80 would be A star. So basically, if you get 50%, you get A star. So it doesn't matter if the paper is hard or paper is easy. It doesn't matter. You just go and just do whatever you know. That's it. Yeah, grade boundaries will change based on how difficult the paper is. Are you there? So that's how you have, when you go for exams, you have to make up your mindset like that. Right. Yeah. So grade boundaries will be very low, Nashta. So you're doing AS level in October, November, right? So don't know how that paper is gonna be. Yeah, no changes in that syllabus though. Right. So shall we do some calculations, Athene? So you got an idea? Yeah. Now what did I tell you guys? How many questions in your A2 paper? Huh? How many questions? Yeah, short term memory loss. 5 questions, yeah. So 5 questions, is it in one paper? 2 papers. No. Yeah, 3. Yeah. First paper is what paper? What do you call? Financial accounting. You might do it together next day because few of us are early. Yeah, I feel like that is a good thing. Yeah, that's better. Do both together rather than doing October, November, and then May, June. Yeah. Right. So, right. So 3 questions in financial accounting paper, 2 questions in management accounting paper, right? Okay. So right. So here, take this view, company accounts, rights issues, bonus issues, par value, share premium, issue of shares. All of you remember this perfectly. Okay. So what I will do is just to recap whatever we have done for S level, I'll just do maybe 1 or 2 examples, right? With this right issue, bonus issues and everything. Then straight away, I'm going to jump to financial statement of company. So for company accounts, what's mainly tested here is they will test income statement of the company, a full statement, changes in equity, balance sheet, financial statement will be tested here, right? So the workings are a little bit more bigger compared to what you have been doing for AS level. Okay, so Ahmad Jalil Maulana, you told me that you studied company accounts like so much and went and then it didn't come in the exam. No? That's unfortunate. Huh? What to do? In almost all the papers, they used to give company accounts for 30 marks, the first question. But this time, no company accounts, they put partnership. No, that's can't help. You have to be you be prepared for everything. Let's see. Right. So here under limited companies, I'm not going to explain what is right issue, what is bonus issue, all that you already know, right? Here I'm straight away going to do an example on rights and bonus issues combined, and then I'm straight away going to do the financial statements of companies, income statement, balance sheet, and all that. So let's look at rights and bonus combined. This is AS level, huh? It's nothing new. Okay, tell me what's a right issue? What is the right issue? When the company issues shares to the existing shareholders, right? Issued for less than the market price. Okay, fine. What's a bonus issue? Free shares to the existing. Company issues free shares to the existing shareholders. Fine. And how do you issue bonus shares? From the premiums. So what's the effect of bonus? There's no effect on cash because it's given freely. So what happens? Your reserves will reduce and share capital will increase, right? That's bonus issue. So let's do one or two quick examples on this and then start financial statement. So look at question number 1 there. They have given the share capital balance. They have given the share premium retained earnings. Then there's a right issue given, there's a bonus issue given. They want you to prepare the equity section of the statement of financial position. Okay, equity section means what? Your balance sheet, the capital part, equity part of the company. So basically you have to find the share capital balance, share premium, and all the retained earnings and everything. So let's do that calculation. You all can follow from the tube and do the workings from this. This what is there in the tube is not so clear, so you can follow from that. This is rights and bonus combined. Manup, where do you stay? You said? Where do you stay? Like, where do you live? Huh? They'll come there. Yeah, it's about maybe 15-20 minutes from here. So after class, how do you go? Bus. Normally you travel by bus. 3. Okay. So any one of y'all who are following online, who are planning to come for the class today physically and then couldn't come because of transport? Try to put a pick me, Uber, nothing. Say to me, yeah. Okay, so let's see. Maybe few weeks more, it's going to get even worse. Huh? Yeah, it doesn't go. It's not going to improve. Yeah, that's what our Prime Minister has said. No? Right. Rights and bonus issue combined. Question number 1. First, there is a 1st of April. The company made a right. Issue. What's the ratio? 1:5. No. Question number 1. First, there's a right issue. So the ratio of the right issue is given to you 1:5, and they are selling the shares at what price? They are selling the shares at what price? $1.4 each, right? Yeah. What's the par value here? What's the par value here? $1. So which means par value is $1. They are selling it for 1.4. Yep. Are you okay? What? Which question are you looking at? In your tube, it's 1.3. Yeah. How is that? Show me. What? Hey, you are in the wrong question. Rights and bonus combined. Those are just for you to try it. Okay, those are our AS level, very basic stuff. I'm straight away going to the advanced one. Yeah. Right. So here the par value is given $1. They are selling the shares at what price? $1.4. So which means there is a share premium. How much there? What's your premium? 0.4 is your premium. Yes, they are issuing for $0.4 more than the par value. That's right. Yeah. Right. So how do you calculate your right issue? Currently, how many shares do we have? Now, if the par value is $1, we have learned that the number of shares and value of shares both will be the same. So what's the, when you divide by $1, what's the number of shares we currently have? The number of shares we have is also 300,000. 300,000 into 1 only, you get the 300,000 share capital value. So always find the number of shares when you are calculating the right issue and bonus issue. So now your rights issue will be, currently we have 300,000 shares. What's the ratio? 1:5, right? So you have to divide it by 5 into 1. So how many shares are we going to issue as rights issue? How many shares? 60,000 shares, right? Correct? 60,000 shares. That's your rights issue. Into what price? They are selling it for $1.4 each. So what's the total cash you are receiving? 84,000. Yes. 84,000. So after this, what do we do? After we get the total cash that we get from the right issue, we have to divide this between share capital and share premium. So you have to split this between share capital and share premium. Share capital and share premium. So tell me how much goes to share capital out of 84,000. Yeah, it's always what? Share capital is always what? Number of shares into par value. So here we are issuing how many shares? 60,000 shares. Par value is $1. So 60,000 into $1, what goes to share capital is 60,000. So from 84,000, 60,000 goes to share capital. The balance 24,000 goes to share premium. Yeah. Haridha, so the total cash is divided between share capital and share premium. Is this understood? Yeah, and there's nothing to understand there. You already know this, right? Okay, so that's rights issue done. So now after the right issue, guys, what will happen to your share capital, share premium, retained earnings, in your equity? What are the changes that will happen now? Ordinary share capital, we already have how much? Ordinary share capital, we already had 300,000, right? Now that will increase by how much? 60,000. Same way, share premium, we already had how much? 120. It's already given. 300,000 was share capital already given. Share premium is 120,000. So share premium is given to you 120,000. That will increase by how much? 20. So to the share capital we have added 60,000. Share premium we have added 24,000. That's the effect of the right issue. That's done. Okay. Right. Then retained earnings. That's the other thing given under equity, right? Retained earnings, how much is given to you? 95,000. Any changes to this? No. The rights issue has no effect on your retained earnings, right? It only affects your share capital and share premium. So now we have fully accounted for the right issue done. So after the right issue, this is your share capital balance, share premium, and your retained earnings. Haridha? Yeah. Well, then what's the next adjustment? Adjustment to 1st July. Yeah. Okay. Enough time to copy? No, done? No? Finished? Yeah. Right. Then 1st of July, the second transaction, the company made a bonus issue of one for every 6. So free shares. How many shares do we have now for us to calculate your bonus? The bonus is issued after the right issue, right? So which means you have 360,000 now. 300 plus 60, you have 360,000 shares. So use the 360,000 shares and calculate your bonus issue now. So what will be our bonus? 360,000 shares after the right issue. Divide by 6 into 1. How many shares? Yes, 60,000 shares. 60,000 shares we are issuing freely. Right? And bonus shares are always multiplied by which value? Bonus shares are always multiplied by par value. So 60,000 into $1, that's your par value, right? Then what's the value of shares? 60,000. So what is the effect on equity then? Share capital will further increase by how much? 60,000 because of the bonus. And where do you minus the 60,000 from? Share premium. You have to deduct 60,000. So you deduct 60. We have enough in share premium, right? That is enough. We have 120,000 plus 24,000. So out of that, we only need 60,000. So you minus 60,000 from share premium. So your reserves are reducing, share capital is increasing. So now what are your new balances? So no changes to retained earnings, remains the same. So what's your ordinary share capital value? This is 420,000 after the right issue and the bonus issue. Share premium is 84. And retained earnings remains the same, that's 95,000. So what's your total equity after the right issue and the bonus issue? What's your total equity? $599,000. 599. 599. Lovely. Okay. Now this looks like eating cashew nuts, no? Peanuts. This is no game, no? Onara is like, oh God, this is A2. Oh no, what the hell is this? Don't worry, guys. When I start company accounts with international accounting standards and all, then only tune life gets very interesting. Yeah. I'm telling you all like this to scare you all only. I'm scaring you all now. Yeah. Yeah, you should be a bit scared because then only you will take it seriously from now itself. No, not scaring you. Then I think you're scared. No, that's what you should feel a little bit scared when I tell like that. Can't study. So what do you want to do then? Huh? Yeah, I mean, you don't have to study. It's not a must. Yeah, but we are studying because we have been pushed into it. No? Yeah, because parents want you to study. Anyone here who genuinely comes to the class saying that I really want to study? Huh? Manara, you're coming because I really want to study and I want to. Or is it because like, okay, people are telling me to do this and like there are the expectations? Huh? Accounts, yeah, lovely. Okay, that's good to hear that. Yeah. But a lot of fellows, majority of the guys, if I ask, like, mom is there. If I don't get the marks for that, if I don't get the marks, I'm screwed. Yeah, for that, because they're scared of that only they come. I don't know. So, right. Anyways, yeah, study because you want to study, not because you're being influenced by. So, looks like Manupa, then what is your interest? You like econ? You can take central bank future governor's position, no? Yeah, because I think with the knowledge that you have, you can handle it. Compared to the person who's running the show, who was running the show, or whoever it is, yeah. You're here because you need these subjects for your degree. Okay, love. So yeah, so you're there with a vision. Okay, you have a plan. So that's good. Right. So yeah, so that's question number 1 done. One last question, guys. So this y'all patas do me question number 2 and tell me the answer. Then I will do the financial statement after that. Get it right. If you get it wrong, I will do another sum. Okay, question number 2. Be careful with the par value, the number of shares and value of shares here. Okay. Yeah, so first there's a bonus, then after that the rights. No. You have to go in the date order. So first you do the bonus, then you do the rights. Got it? Share capital, share premium, retainer. Lamai ni. Pwede bang answer? Yeah, tell me. Okay, answer. Huh? Yeah, yes. Tamir, you have got 70, 51, 75. I guess that's right. Did you get the same one? Huh? Just only 70 ordinary shares. 55 plus 6,000. 61. Mhm. Share premium is 50. Okay, now he has got 51. So we'll see. Okay. Yeah. 51, correct. You got that. Minus 10 from the rights issue. Lovely. Okay, I think then it's correct. Okay, so here, yeah. I mean, you can't be struggling with this. I mean, you should like patas get it right. Okay, so right, fine. But trust me, guys, A2 topics are like marathon. you will enjoy doing it. You will see. I of course enjoy teaching it also. So here, first of all, before you do the rights issue and the bonus issue calculation, what do you have to first calculate? Your number of shares, right? So they have given 50,000, the value of shares, par value is 0.25. Then how many shares do we have currently? 50,000 divided by 0.25. That's how much? 200,000. Correct? 50,000 divided by 0.25. That's 200,000 shares. Yes. So using that only, you have to calculate your bonus issue. You have to calculate your rights issue. So first they have given a bonus. 1:5. So how much will be the bonus issue then? Your bonus is going to be, we have 200,000 shares at the moment. Divide by 5 into 1. So that's how many shares? 40,000, no? 200,000 divided by 5 into 1. So we are going to issue 40,000 shares freely. Okay. So always bonus shares are multiplied by which value? Par value, right? So these 40,000 shares are worth how much? Doesn't change because there's enough in share premium not to minus. So 40,000 shares, you multiply it by the par value 0.25, then you will get the value of the shares. How much? The value of your free shares is 10,000. That's your bonus. Okay. So after the bonus, what will happen now? First, you have to adjust this. So what will happen? Your share capital will increase by how much? Share capital will increase by 10,000. Share premium will reduce by 10,000 because of the bonus. Done. There is enough in share premium. So minus 10,000 from share premium, add 10,000 to share capital. So here in this question, what's that's 40,000 shares. Now we multiplied by the par value. Bonus shares are always valued at par value. Okay. So first find the number of shares, then work out the value of the shares. Right. Now bonus is done. Now you have to calculate your rights issue. Rights issue. Rights issue, what's the ratio given? 1:6. So now to calculate your right issue, how many shares do we have now? What's the number of shares? Number of shares. How much? 240, no? We had 200 plus we issued 40,000. So 240,000 shares we have. Yeah. Divided by what's the ratio? 6:1. Then how many free shares, how many rights issue we are going to issue? How many shares? That also another 40,000 shares. Okay, 240,000 divided by 6 into 1. So these 40,000 shares are sold at which price? They are selling it for 0.4. Then what's the total cash you got? 16,000 is your cash. Did you understand this? Yeah.
So how will it after you understand?
That's okay, no? Right. So now this is the cash that you are receiving now. 16,000. So what do? This 16,000 has to be divided between share capital and share premium. So you have to split this. Yeah, the total cash, like in the earlier question, how much goes to share capital, how much goes to share premium? Yeah. That is, how much goes to share capital? Yes. Share capital is always what? The number of shares into par value. So that's 40,000 shares now. Into par value is how much? 0.25. So 40,000 into 0.25, how much goes to share capital? 10,000 goes to share capital. So always share capital is the number of shares you are issuing into par value. So we are going to issue 40,000 shares. That's the right issue. Par value is 0.25. So 40,000 into 0.25, you get 10,000 share capital value. But the total cash we got is how much? 16, right? So out of 16,000, 10,000 is share capital. 6,000 is your share premium. Is that understood? Yeah. So the 16,000 you are dividing it between. Yeah. 16,000 you are dividing it between share capital and share premium. Okay, so now see, after the right issue and the bonus issue, now what will happen after the right issue? What are the changes to share capital and share premium? Share capital will increase by further how much? 10,000. And share premium will further, yeah, say to me, you have taken 4,000 and 12,000. You understand now how to do that? Yeah, so that is, yeah, share premium will increase by 6,000. So now, yeah, after your right issue and bonus issue, what's your total? 70,000 is your share capital. Share premium is 51,000. Retained earnings, of course, remains the same. No changes to that. That remains at 75,000 itself. Haridhar, so what's your total equity? 196,000. Correct, no? Yeah. Yeah, 196.
Both the share capital and share premium, we should deduct it.
For which one?
No.
The right issue?
Yeah.
No, right issue, when you issue right issue, share capital and share premium increases. You are getting more money. So the 16,000, out of that 10,000 will increase share capital, 6,000 will increase share premium. Okay. So always when the company issues normal issue of shares or rights issue, both share capital and share premium will increase. Only bonus issue, share capital increases, but the reserves will reduce. Okay. So shall we look at company financial statements? Ready? Full ready now? Okay. In school, you said you are doing manufacturing account with unrealized profits. No? Did you learn unrealized profit, factory profit, all those? Then now you are doing club accounts. Okay. Okay. I didn't start with manufacturing account because I know that in school you are starting with that. So if I also do that, it's like boring for me. So I'll let you all forget that for maybe after like 1 or 2 months, I'll do manufacturing. Then it's not hard. It's not hard. It's not hard. But after 3 weeks, if I ask you what's unrealized profit, you'll be like, oh my God, yeah, we learned something like that. Yeah. At that time, we'll start doing manufacturing account. Okay. Right. So Senuka, are you okay? Yes. Okay, so the rest of the questioning that there are other questions with rights issues bonus that you all just can try it out. Okay, if you have a doubt, you ask me. Yes. So much of vans have come from, I don't know from where. Yeah, red dance. It's okay. Right. Okay. Guys, now the company accounts format. So what are the financial statements that they will ask you to prepare? Companies. First, you normally, what's the first financial statement? Income statement, right? Yeah, now actually they don't call it income statement. The new term that they use is statement of profit or loss. Okay. Actually, the new term that they are using is statement of profit or loss and other comprehensive income. Right? So that is, yeah. So instead of income statement, see, they have called it statement of profit or loss. Then you have to do statement of changes in equity. Second one. Then you have to do statement of financial position. Then there is something called statement of cash flow, which you have not done for AS level, so that you will be learning in A2. Right? So in total, guys, companies, they have to prepare how many financial statements in total? In total, 5. Statement of profit or loss, statement of changes in equity, statement of financial position. There's something called statement of cash flow, and there's something called notes to the accounts. Huh? Yeah, I showed you sometime before, yeah, the financial statement of a company. So 5 financial statements. But out of this, 4 statements they'll ask you to prepare. Notes to the accounts, there are certain things that goes to the notes. You need to know what goes to the notes to the accounts, but they are not going to ask you to prepare the notes to the account. So only 4 financial statements you're going to learn here. Okay, so look at the format of the income statement, guys. See how the income statement is done. This is the format, guys. In A2, you can't do any other format. You have to stick to this format. If you don't follow this format, you will lose marks. It's not there. Yeah, in AS, what's the difference? Look at the financial statement given here and the AS income statement. Was there anything different? Or did you do the same thing?
We did the same thing.
No, there was one small difference there. One is, yeah, in AS level, there was no tax. Tax wasn't tested. Other thing is, when you are doing cost of sales AS level, you show the opening stock in the income statement, purchases, closing stock, everything you show it in the income statement. Here, guys, cost of sales, you have to directly take the total. Yeah, so how do you normally find cost of sales? Opening stock, purchases, minus closing stock, all that working, you can't show it in your income statement. If you show all the opening stock, purchases, closing stock and all in your income statement, you will lose marks. Okay, so calculate your cost of sales separately, take the final answer to the income statement. So in your income statement, you start with revenue minus cost of sales, then you get the gross profit. Then, as usual, distribution, cost and administration. So all the expenses will be divided into those headings, distribution, cost and administration. So what are the expenses that goes to distribution? What kind of expense? All the expenses connected to sales, right? Selling expenses, all the marketing, advertising, all those expenses. Administration expense, what do you get? All your office related expenses. Yeah, office staff salaries, office rent, depreciation of office assets, all that goes to administration. Then the answer that you get is what? Profit from operations. Then you have to minus finance cost. Finance cost is what? All your interest. Then you get profit before tax, then you minus taxation, and then you get profit for the year. So this is the format given by the examiner. So this is the format that they expect you to follow in your exam. So company accounts in A2, guys, if you follow any other format, you will lose marks. Everything should be shown as a total. So do you want to copy this down? Format, or you all can remember? No need to copy both. Just take down only one, only this one. They have given for 2 years the format, but if you just show, so make sure that revenue, cost of sales, gross profit, distribute, everything is shown as a total. Working should be done elsewhere. There's one additional thing here, guys, which is not given here in this. One more thing, guys. In addition to this cost of sales, distribution, administration, sometimes there can be investment income. You invest money and you get some returns from investments. So normally if a company is investing money, where do they invest money? Either they will invest the money in a bank, right? So that what do they get in return? Interest when you invest money in a bank, correct? Or they will buy shares of another company. Your company, they will buy shares of another company. So when you buy shares of another company, what do you get in return? What do you get in return? If you buy shares, what do you get? Dividends. So investment incomes means sometimes you can have dividend received, you can have interest received. Where do you put that? Finance cost is what? Finance cost is what? That's all the interest paid. The interest we are paying on bank loans, interest we are paying on debentures, all the interest we are paying, only finance cost. So if you receive interest, it's an income loan. If you receive dividend, it's an income loan. So where do you put that in your income statement? Where do you put that? Normally other incomes, where do you take? Normally other incomes, you add it to gross profit, right? That is fine. That's for all the like decrease in provision for doubtful debt, rents received, discount received, that you can show on the other incomes. But if you have interest received and dividend received, this you call it income from investments, or you call it returns from investments. That is interest received and dividend received. If you have interest received and dividend received, where do you put? After the operating profit, you have to add something called investment income. Okay, if there are investment income, so investment income includes what? Interest received and dividend received. So if you have interest received and dividend received in a question, add it to the operating profit. After that only you minus finance cost and you get profit before tax and everything. So just show this entry also in your income statement, the format, right? So I'll give you 2 minutes, but just copy down the format. You don't have to copy down the values. If you just understand the format, that's enough. Guys, any doubts, please ask me. If you did not understand that what investment income is and any problems. So when you apply to the question, you will understand it better. For the moment, all good. Just take down the format. You know that song? Or love songs. Love songs. I'm in love. I'm in love. Shaheen, are you there? Are you there? Format done? Yeah. You're not following you're not going to continue the full-time class. Okay. Yeah, once the full-time classes commence, I'll be doing the same thing. So yeah, I was wondering why you are there. This is for the evening students now. Yeah. And I have divided the class into 2 halls actually for the evening students. People who are doing the ACE level exams this year. Yeah, I asked them if they want, they can start A2 from now itself, but they have still ACE MCQ paper pending. So once they are done, for the rest of the others, I'm starting A2 another batch. Right? Okay, so format is done. So shall we do a full financial statement? Okay, so look at one more thing. So that's income statement. I forgot. Then the balance sheet. What's the format? Statement of changes in equity is the same thing. Share capital, share premium. You have done this. It's the same. No difference compared to ACE level. So you have revaluation reserve, general reserve, retained earnings. Can you remember? No? So statement of changes in equity, same thing. Then statement of financial position. Look at this. This is the format given by the examiner itself. What's the difference you see here compared to the normal balance sheet that you prepare? Do you see any difference? What's the difference? Like you have share capital, share premium, general reserve, retained earnings. So equity, no changes. Non-current liability also no changes. Current liability also nothing. Trade and other payables and tax liabilities and all. Yeah, tax liabilities, whatever the tax you have to pay. So that's an additional liability. So that's one extra thing under current liability. So under equity and liabilities, nothing much. Look at non-current assets and current assets. Do you have a change? Non-current assets, there's something called intangible assets, right? And goodwill. Yeah. So you know what are intangible assets? Yeah, assets which doesn't have a physical existence, like goodwill, brand names, and all that. So we will be learning this in detail. There's a separate accounting standard for this. IA studied. I'll be explaining that in detail. So there's a for intangible assets itself, there's a separate accounting standard. So I'll be explaining that later on. So in your non-current asset, guys, if you have intangible assets, first you have to show that. Then after that, what are they showing? What's the next item? What's the next item? You have property, plant, and equipment. What is that? That is normally in AS level when you did company accounts, what did you do? You take the building cost, you minus the accumulated depreciation, you show the net book value, right? Machinery, you take the cost minus accumulated depreciation, you show the net book value. Motor vehicles, you show the cost minus depreciation, you show the net book value. That's what you did now. In A2, when you are recording all your non-current assets, all the tangible non-current assets, you can't show each non-current asset separately. Okay, you can't show in your non-current asset, you can't show motor vehicles, machineries, equipments, buildings, all those separately. Do all the calculations separately. Add all the assets net book values, building net book value, machinery net book value, motor vehicle net book value, add everything, and the total net book value is only taken here to the balance sheet directly. So how you get this property, plant, and equipment, you have to show it as a separate working. Is that understood? Yeah. So here, if you show motor vehicle, buildings, equipment, machineries, and all separately under non-current asset, you lose marks. Okay, calculate it separately outside the balance sheet, do the workings, and take the final total to the balance sheet under non-current asset. So all the tangible non-current asset, you have to put it as what? As property, plant, and equipment. Is that clear? Yeah. So that is the only difference, right? Apart from that, do you see any other changes? Current assets, inventory, trade and other receivables, same thing. What is this cash and cash equivalent? Yeah. If no, that's okay. Say to me, if you want trade receivables and other receivable, you can show it separately also if you want, no problem. Here they have shown it together, but if you want, you can show it separately. What's the last thing? That's cash and cash equivalent. What's cash and cash equivalent? Cash in hand, cash at bank, everything together. So that's cash and cash equivalent. So do you understand the format? So what is the only difference, guys, when you're doing the balance sheet? Your non-current asset part. Apart from that, everything else is the same. Are you there? Okay. So let's do the. So I don't want you to copy the balance sheet. So when you're doing it, you will understand only that. No, only non-current assets, right? Right. So yeah, let's do a question now. Look at you have the first question, no? Yeah. So in that they have given the following information was extracted from the following information. Trial balance was extracted from the books of Rashmi Limited, 31st March 2011. 31st March 2011. They have given you the company's trial balance. Few additional information is given to you, and what do they want you to do? They want you to prepare a statement of profit or loss statement. So now you know the income statement format, the balance sheet format, right? So income statement, you can call this statement of profit or loss. For the year ended 31st March 2011. So you start with revenue, then cost of sales, then you have gross profit. So you can just do it in one column. Minus administration expense, minus distribution expense, Then you have operating profit. Then if you have any investment income, you need to add it. Minus finance cost. Then you will get profit before tax. Then minus taxation. Then you get profit for the year. By the way, guys, if you all have been like rejected by girlfriends, boyfriends, and everything before, still you all don't have to give up hopes. Huh? You still have hopes. Why? Because Ranil Wickremesinghe itself has become prime minister now for the 6th time. Okay, after being rejected so many times, he still managed to become the prime minister now. So you all still have hopes. Okay, so don't give up hopes. Not only when it comes to girl and boyfriends, in anything. Yeah. Huh? Exams, yeah, everything. Exams also. That's the thing. So it applies to everything. Bagge is becoming prime minister from him. Suddenly, from nowhere, he becomes. Exactly, that's the thing. He has to be, I was thinking, he has to be a bloody smart fellow, no? I mean, to become like that after being rejected several times, that's crazy. That's next level. He's like a kingmaker, no? Right? Then you can put the statement of changes in equity. How many columns you need to have here for statement of changes in equity? What are the equity items given? Look at your trial balance. What are the things given there? Which goes to equity? There's share capital, there's share premium and retained earnings. No? Anything else? No general reserves. There are no revaluation reserves. Nothing. So only 3 columns and a total, right? So put the statement of changes in equity also. So I will do that here. Statement of changes in equity for the year ended 31st March 2011. So you have a column for ordinary share capital, then share premium, retained earnings, and total. So you have to start this with the balance brought forward and make all the changes. Yeah. Then put the statement of financial position also. What do you want? Equity for the year end at 31st March 2011. Which one? First one is ordinary share capital, then share premium. I have written you write the full form, okay? Understand? So share premium, retained earnings, and total. Right? Then SOFP. statement of financial position as at 31st March 2011. Non-current assets. Don't worry, Manuka, I'll give you a break. A longer break than usual. 6:30, no, it's a 2.5 hour. A2 is 2.5 hours, not 2 hours. 2 hours we can't do anything much. By the time we just do one statement itself, 2 hours will be over. So the workings are 20 minutes. Usually I give 15 minutes. Yeah, I'll give 20 minutes. Usually I give 10 minutes. Then I should give only 15 minutes, no? Yeah. Okay. Yeah, non-current assets. Then you have here. So you know what entries goes there. Then current assets. Then equity. Non-current liabilities. So here, guys, that you know that O level and all, how we used to do that 3-column cost column accumulator. Here don't put all those nonsense. Here straight away the net book value, workings and all show it outside the financial statement, right? Okay, so non-current liabilities and then finally current liabilities. Right. Which one? The changes in equity. Right. Now, normally when you are starting income statement balance sheet question, we start with what? Additional information, right? After that only we take all the entries from the trial balance. So look at the first adjustment. What are they saying there? In that they have said during the year, company paid a final dividend. How much? They have paid a final dividend of 240,000 in respect of the year 31st March 2010. Read that sentence again, Manupa. What are they saying there? They are paying a final dividend of how much? 240,000. That's in respect of which year? 2010. We are in which year? We are in 2011, right? We are doing the statement for 2011. Then what is the 240,000? What is that 240? What do you do with that? See, you have learned proposed dividend. Proposed dividend, do you record in your accounts? If they give you proposed dividend for this year, do you record it in this year's accounts? No. So this year's proposed dividend, you actually record it in the next year's financial statements, right? That's what they are saying here. So this is final dividend, means this is the proposed dividend.
But we are recording it as a separate dividend.
No. Interim dividend is separate. That's a separate thing. Here, what they are saying is, this is the 2010 proposed dividend, 240,000. It was paid during which year? This year they have paid the 240,000. So should you record this 240,000 for the last year or for this year? You have to record it for this year because this 240,000 is last year's proposed dividend. So you don't record it for the last year, no. So that should be recorded for this year. If they give you a final dividend or the proposed dividend for this year, that you don't take it for this year. That will be recorded in the next year because it will be paid only in the next year. So this 240,000, this is last year's final dividend or last year's proposed dividend. You have to record it for which year? For the current financial year. Did you understand that? All okay? Currently. So, yeah, currently. Yeah, all this time it was on generator. Yeah. I don't know for how long we'll be able to use the generator also. At the moment, we have diesel. But if it goes to like 15 hours of power cut, Chaka plus manna kausa. Forget about doing exams and everything and just stay at home, right? Yeah, just chill life. Yeah, okay. No account, no BS, no econ, nothing, right? If you can invest in that karat bucky, what do you call that? The cow and bull, then you put and chuck, that in olden days. That invest in that bullock carts, right? Right. Okay. So here, okay, I want you to now repeat this, sir. What is this 240,000? Take these things in your head. Okay, it should not be there only in the book. This is what dividends? Explain it to me. This is last year's what? Last year's proposed dividend. Paid during which year? It's paid during this year. So you have to take it for this year's account. Okay. So where do you minus dividends then? Yes. Where do you minus your dividends? Normally, where do you take dividends? You minus it from retained earnings, right? Where? Statement of changes in equity. So whenever you pay dividends during this year, that has to be deducted from your retained earnings in your statement of changes in equity. I'll come to that. Wait. What else are they saying in that same adjustment? What else are they saying? What else? This was in addition to what? The interim dividend paid on 1st September 2010. So 1st September 2010 is our financial year, right? Our year end is when? 31st March 2011. So April 2010 to March 2011 is our financial year. So during this year, they have paid an interim dividend. What's interim dividend? Interim dividend means dividend paid in the middle of the year. So how many dividends are they paying this year then? There are 2 dividends. One is in the middle of this year, they have paid some dividends. And also last year's proposed dividend also is paid during this year. So what's the interim dividend they have paid? How much? Not given, no? So do you know the amount then? Do you know the amount? The last year's final dividend is given to you. That's 240,000. How much is the interim dividend? How much is the interim dividend? Anyone? Here. Can you say this? Very good. Yes. Yes. 150. Yeah. See, if you look at your trial balance, what's the total dividend paid given? 390. That's your total dividend paid. But out of 390, how much is your final dividend? 240. That's the last year's dividend that was paid this year. So which means out of 390, if you minus the 240, what's the balance? The balance 150. So that balance 150 is what? That's your interim dividend. So altogether, the total dividend paid is how much? 390. That is what is given to you in the trial balance. So that 390 is made up of final dividend 240, interim dividend of 150. Altogether, they have given 390,000. Is that clear? Yes. So anyways, whether it's final dividend or interim dividend, the total dividend paid is how much? 390. So you have to minus all the dividends from where? From retained earnings in your statement of changes in equity. So go to the statement of changes in equity. So leave room for the opening balances. Normally to this, we add the profit, right? If you make a profit, you have to add it to retained earnings. So leave room for that. Then minus the dividend paid. So I will show it separately. Final dividend paid. So I will show interim dividend paid and minus the final dividend. So I'm going to minus both the dividends. So interim dividend paid was 150 and final dividend was paid how much? That's 240. 240. So in total, what's the dividend that we are minusing? In total, we are minusing 390. What is that 390? That's the amount given to you in the trial balance. That's a total dividend. Interim and final put together, right? So dividends, you only minus it from retained earnings, right? So that we have entered. So that adjustment number 1 is done. Then adjustment 2, what are they saying? The tax charge for the year, how much is given? 470. So when they say tax charge for the year, is it given in the trial balance or is it given in the additional information? That 470, where is it given? Additional information, right? So that means have they paid the tax? This is the estimated tax for this year. The tax expense for the year they have calculated, but the tax is not yet paid. If it is paid, they should give it to you in your trial balance, like all the other expenses. So this year's tax is not yet paid. So which means what are the places you take this taxation? One is in your income statement. There's a separate heading for tax, right? So from profit before tax, you need to minus tax. How much? 470. This one. And have they paid this tax? This year's tax is not yet paid, right? So where else should you show this then? This expense is accrued. So it should go where else? Current liabilities. The tax for the year is not yet paid. So you have to show it as an expense as well as under current liabilities. You leave room for trade payables. So I will put trade and other payables together. Trade and other payables. And then you need to put taxation. So tax, that 470 is not yet paid. So you need to record it under current liability. Okay. So tax, how many places I showed? 2 places, income statement and current liabilities both, because the tax is not yet paid, right? So that's adjustment number 2 done. Then adjustment 3. What are they saying there? I will just say, not here, I'll change the word slightly. Proposed. What's the last adjustment? The directors proposed a final dividend of how much? 270,000 on 3rd April 2011. So the directors are proposing a final dividend. That is, they are proposing the dividend for this year, right? So should you record it in this year's account? No. When are they proposing the dividend? That's 3rd April 2011, right? That's after the year. So this year they are proposing the dividend only in the next year. So should you record it for this year's accounts? No. So that is this year's proposed dividend that will be recorded in the next year's account. So we don't have to take it for this year. So you basically completely ignore this. The current year proposed dividend, you totally ignore. You don't have to consider that. Is that clear? So all the adjustments done now. So here I have just given very limited additional information, only dividend. Going forward, this number of adjustments will increase, right? Now what do you do? One by one, all the entries from the trial balance, let's take, starting from right on top. What's the first item? First item is revenue, right? That where do you take income statement directly? So put that. So revenue is given 5,300. That directly goes here. No, we'll also do this in thousands. Even the balance sheet and everything, we put it in thousands. So all these are in thousands. So actually this is 5,300,000. So cut off the last 3 zeros. So 5,300. Right. Then what's the next item? You have after revenue, you have cost of sales. So see, cost of sales, do you have to calculate the cost of sales? No, it's already calculated and given. So they have already given to you the total cost of sales, how much? 1,350. So you can directly put that in your income statement. 1,350. Right? So then how much is your gross profit? Yes, that's 5,300 minus 1,350. You will get 3,950. That's your gross profit. Nothing to calculate that. It's directly given the values. Right. Then after gross profit, have they already given the administration and distribution the totals, or do we have to find it? It's given to you, right? They have given the administration expense, distribution expense, the totals are already given. So you can directly take that to the trial balance. So anyways, let's go one by one, entry by entry. So we took revenue, we took cost of sales. After cost of sales, what's given in your trial balance? That's dividend received. The next item, the third item. How much dividend received is given? 200 and where do you put that? Very good. Yes. You have to take it under investment income. Can you remember I told you if you receive interest and if you receive dividends, you have to take it under investment income. So that's dividend received 210 is an income. So under investment income, you add the 210. So investment income includes what? Dividend received and interest received. Okay. So when they give you interest received or dividend received, always take it to investment income. That's a third item. Done. Then administration distribution, already the totals are given. Enter that. Administration expense is given to you 490. So that comes here. Distribution expense is given to you 370. Yeah. Then how much is your operating profit? 3090. Yes. That's 3950 minus 490 minus 370. Okay. Then finance cost. That's the next item, but let's take entry by entry. That's given here interest. Look at your trial balance after administration and distribution. Interest payable, they have said, right? What have they said there? Interest payable, how much? 190. So what is that? Is it an expense? Is it a liability? Yeah. Where do you put that? Liability, is it? Very sure. Finance cost. Forget about the word. Even though they are saying that interest payable, the interest is given on which side? Debit side. So if it's given on the debit side, is it an expense or liability? It has to be an expense, no, it can't be a liability. If it's interest accrued, it should be given on which side? Credit side. Then you put it under liabilities. So here they are referring to the interest expense, which is 190. You directly put it under finance cost. Yes, all that is all the interest that you have paid. So which is 190 that you need to deduct. Then profit before tax here. So 3090 plus 210 minus 190. Huh? 3110. No. Yeah, 3110. Yeah. 3090 plus the 210 minus the 190. Okay. $2,640 final profit. Final profit. Okay, income statement done. See how A2 more simple, easier than AS also, right? You see, more chopper matter. Just take from the trial balance, put the values in the format, and yeah, 25 out of 25. No game. Huh? No, these are from the no, not from the past paper. So from the the syllabus, that textbook and all is there from that. For you to understand company accounts and all, they give these questions. No, I didn't make. If I make the questions, it won't be this easy. Yeah, so I will make it a bit more hard. Yeah, this is like, yeah, this is too easy. So that's okay. Interest done, income statement done. What's the next item? There are prepayments given in your trial balance. What do you do with that? Prepayments are what? Those are prepaid expenses, right? It's given on the debit side how much? What's the next item? Prepayments, how much is given? 25, no? Where do you put that? Normally prepayments, what do? We minus it from expenses and we put it on the current assets, right? Other receivables. What do you do with the 25? Do we have to minus it from expenses? No. Here prepayment is already given to you in the trial balance, no? So if it's already given to you in the trial balance, you have to only take it to how many places? Only one place. If prepayments or accruals is given in your additional information, then only you have to adjust it in 2 places. So here what you should understand is the prepayments are already adjusted to the expense. They have already minus from the expenses. So expense is nothing. So where do you take this prepayment? Only current assets, other receivables, only one place you take, right? So that's 25. So in your current assets, you will leave room for inventory. Inventory, then trade and other receivables. So trade and other receivables. So other receivable, you need to add how much? The prepayment of 25. So I'll just show that. Finally, we'll take the total. Right? So that's prepayment goes to current assets. What else is given? Then after, then you have dividend paid. Have you already taken that? The 390 we already minus, right? From retained earnings, it's already done. Then you have what? Property, plant and equipment. Now here guys, they have made it easier for you. Why? All the non-current assets, they have already calculated and given the net book values. Yeah. So they have already given the net book value of property, plant and equipment. How much? 4,250. So where do you put that? Non-current assets. So in your non-current asset, you say property, plant and equipment. All your tangible non-current asset, you have to put it as a total. Property, plant and equipment, that's 4,250. 4,250. That goes to your balance sheet. What's next? Short-term investments. What do you do with that? There's 2,700 there. Short-term investments, where do you think you have to put it? Where does it go? Is it asset or a liability? Investments are what? Assets, no? Yeah. So it's a short-term investment. Then which asset? If it's a long-term investment, you're going to earn income from that for more than 1 year. Then non-current assets. If it's a short-term investment, you have to put it under current assets. So in your current assets, you leave room for inventory, receivables, then short-term investments. Short-term investments that you have how much? That's 2,700. That you take it under current assets. Okay. Right. Then inventory. That's which inventory? 31st March. Already the closing stock is given to you in your trial balance. So that's 114. That direct. So why have they given closing stock? Because already in your trial balance, the cost of sales is given, right? So that means they have already calculated, they have already considered the closing stock once, and cost of sales already is given. That's why the closing stock is given to you in your trial balance. So you only take it to where? Balance sheet. Income statement, they have already considered that. Okay, so inventory, that's 114, goes to current assets. Only one place. Then you have trade receivables, that's 418, that's current assets. Add it to current assets. Then you have cash and cash equivalent, that's given on the debit side, 12, that also goes to current assets. Equivalent, that's 12, that's current assets. Then trade payables goes to current liability, that's 136. 136 trade and other payables, you add it to trade payables, 136. And then there are long-term loans, that's non-current liability, that's 1,200. Long-term loans, 1,200. Non-current liability. Then you have share capital, share premium and retained earnings. So these are all last year's balances, right? So where do you take this? To the statement of changes in equity. So share capital, you have 1,500. Share premium, you have 800. 800 share premium, and retained earnings, you have a balance of how much? That's 1,163. So those three take it to statement of changes in equity. So have we taken all the entries? Yeah. Have you taken all the entries from the trial balance? Yes. Now it's a matter of balancing it. So first of all, what do? You have already taken the income statement profit. No? That's done. So what's the profit for the year we got? 2,640. Where do you put that? That profit should be added to retained earnings, right? So in your retained earnings, first you add the profit for the year. Profit for the year. Add 2,640.
So you don't profit for the year after also.
You can put it there. Yeah. So, okay. Yeah, you can put it there. So, yeah, profit for the year I have already written there. So, how much profit for the year? That's 2,640. So, add it there. So, then you take the totals, the closing balances. So, share capital, of course, no changes. The closing balance remains the same. There were no issue of shares. Share premium also remains the same. Retained earnings, after all the changes, what's your closing balance there? 3,413, righto, 3,413. Yeah, now done. It should balance. So what do? These closing balances, what you got here, where do you put it? In your balance sheet, under equity. So share capital in your balance sheet, you say ordinary share capital. Then you have share premium. And you have retained earnings. So share capital is 1,500 we had, share premium we had 800, and retained earnings was 3,413. Yeah. So get your total equity. Addition of all three here. Three, 463. 3,413 is the retained earnings, right?
Yeah.
Yeah, that's correct. No, so 3,413 nashta plus 800 plus 1,500. No, 5,713. Yeah. Calculation. Yeah. No issues. No issues. No issues. 5,713. That's your equity total. Yeah. Yeah, that's it. Then your non-current assets only one item. Current assets you have take this trade and other receivables. What's the total? 418 plus 25. That's how much? 443. Correct. 25 plus 418. And then your total current assets here. Then you will get your total assets. Yeah. How much? Current asset total and your total asset, the balancing figure. 7519 is the current assets or total. 7519 is the balancing figure. Okay. Yeah. So trade and other payables, only one item is there. That's 136. So get your total current liability and add it to the equity and non-current liabilities. So that also should equal to 7519 balances, right? Equity plus liabilities. Balanced. Okay, done. One done. About 50 more questions to do. Okay, one done. Around 50 more questions only on company. Okay, so 49 more. Right? Okay, so now you can go for a small break. I'll see you back again in 20 minutes. Okay, we'll do another question. Yeah, so gradually we'll increase the number of adjustments that we are doing, right? Okay. Hello, guys. Hello. Hello. Hi. Hi, Situmi. And hi, everyone else. Hi, Nashta. How are you? Full form today. Today, of course, I feel like you are there, focused from the beginning till the end, I feel. Yeah. Because some of the other classes, because once you realize that you're not doing exams in May, June, like sometimes you just come to the class, first 5-10 minutes JPK you do, and then after that you go and finally you come again. Correct now? Correct now? In between all chaka blast, no? You took it a bit easy because no need to do the exams and okay, let's chill a bit. But your future is not accounts. Your future is business only, business. You were a little Mongol that time, no? Yeah. You're still Mongol only. Not that time. Now also Mongol only. Hey, where are the country fools? They're down. Okay. 2 minutes more, no? Welcome. It's okay. Yeah. So you can focus on doing your business and
Break is not over, right?
break is over and I finished almost one question. Yeah. Just look at the question.
Good.
Hi.
How are you?
I'm good. How are you? What's happening?
Nothing much. Come next week.
Wow. You come next week, no? This week, then take the recording and go through. The continuation. No? Okay. What's up with all these, that arithmetic, this arithmetic, something in the ear, something in the pocket, something outside the pocket hanging? Huh? Okay. Like, no. See you. Bye. Right. Patangamune. Where's this guy? He's outside the washroom. Okay, fine. Sanuka, no? Yours, Sanuka? This is like a transposition error, no? Sanuka and Sanuka, no? Anyway, I might get the names mixed up definitely, but it's okay. If I say Sanuka or Sanuka, one of you look at me, right? Okay. Sanuka, right? And Manu, ayyo. This class is like all rhyming. All the names are. Right. Look at question number 2 here. Right. So here again, it's the preparation of income statement and balance sheet. The requirement is not given here. What I want you to do here is, if you want, you can write down the requirement. You don't have to do an income statement. Income statement is already done for you. And if you see, the profit for the year is already given there. Can you see that? Profit for the year already given. So what I want you to do here is a statement of changes in equity. Yeah, statement of changes in equity and statement of financial position only. Only those two, right? Yeah. Right. Before doing the statement, so no need to do income statement here. So I'll just write down the requirement. Statement of changes in equity, and then statement of financial position. Statement of financial position. Okay, so for you to do the statement of changes in equity now, if you look at your trial balance, this profit for the year is subject to items in the following notes. Subject to items in the following notes means, that means they have calculated this profit, this 222,000, before considering any of these adjustments. That means the profits are subject to the items given below. So subject to the items in the following notes means that profit for the year is given without considering any of these adjustments. So before doing the statement of changes in equity, what do you have to do? You have to consider these adjustments and find the corrected profit. Then only you can do the statement of changes in equity. So first we have to find the revised profit, the corrected profit, then we can do the statement, right? So we'll start working with the wrong profit. So this is the working of the statement. So we'll start the working with the profit for the year. What's the profit for the year given to you? That's 222,000, which is the wrong profit. Okay. Then first adjustment. So we'll deal with the additional information. Then after that, we can prepare the statement. So first adjustment, the loan interest for the year 31st March 2011 remains unpaid. So the interest on loan, they have not yet paid for the year. So look at the trial balance. How much is the loan given? How much is the loan given? 100,000, right? Do you see that? How many percent loan is that? It's a 6% loan. So 100,000 into 6%, what's the total interest you have to pay for the year? What's your total interest?
6,000.
6,000. Oh. So that's your, yes, that's your interest expense for the year. Now, have they paid that interest? No. Nothing is given for interest in your trial balance. But what do you have to do? This 6,000 interest is the expense relevant for the year, right? So you have to minus that from your profit. No. They have not yet deducted. The interest have not yet been considered when they are finding the profit. So what do you have to do? From this profit for the year, first of all, you minus interest on loan, which is 100,000 into 6%. So 6,000 you deduct from here, from your profit. So they have not minus this interest. Huh? And what did they say about interest? Interest is not yet paid, right? So where else do you put this? Current liabilities. The interest for the year is still accrued, unpaid. So when you are doing the balance sheet, you have to show this 6,000 under current liability also, right? So I will just find the corrected profit, then we'll do the statement. So that's adjustment number 1 done. Adjustment 1 done. Then adjustment 2. We just did the first adjustment in this question where they have not taken the interest. So I have calculated the interest and minus from the profit. So what they have done here is the profit is given in the trial balance, the wrong profit. So they have asked you to consider these adjustments and find the corrected profit. That's what we are doing first, right? So first adjustment is done. Then the second adjustment. There was a plant disposed originally costing 32,000. So that's a disposal of a non-current asset. So the cost of the asset you are disposing is 32. It has been depreciated by how much? 6,400 had been charged by the date of disposal. So what they're saying there is you are selling a non-current asset which is costing how much? 32. It has already been depreciated by how much? 6,400. So what's the net book value there? 32,000 minus 6,400. How much is the net book value? How much? 25,600. Yes. Correct? That's your net book value. So they have sold it and they have not considered this no, when they are doing the trial balance or the profit calculation. So we have to find what? The profit or loss on disposal, right? So to find profit or loss on disposal, they should give you the selling price. Look at your trial balance. Have they given the selling price of the asset? The last item in your trial balance. They have given sales proceeds of plant, how much? That is the selling price of the non-current asset. So that's given to you in your trial balance, 24,000. So only that selling price, they have made the double entry, nothing else. That's why the selling price is given to you in the trial balance. So they have not made any other entries for this disposal. Okay, so 24,000 if they sell the asset, net book value is 25,600. So is it a profit or a loss? Net book value 25,600, selling price is 24,000. So you are selling it for less than your net book value, right? So it has to be a loss. So this is 1,600 loss on disposal. Is that clear? Yeah. So where do you take that loss on disposal? That has to be minus from your profit, no? So you say here loss on disposal.
So what are we making like?
We are finding the corrected net profit because the profit what they have given is wrong. Okay, so because we need the correct profit for us to do statement of changes in equity. So loss on disposal is 1,600 you minus. Okay, so the cost and the depreciation was given. Using that, we found the net book value 25,600. Selling price was given to you in your trial balance 24,000. So your selling price is less than your net book value, so it's a loss 1,600. So now this second adjustment, have they recorded this when they prepared the trial balance? No, none of these adjustments have been considered. So if they have not considered this, what's your total plant and machinery cost given to you in your trial balance? What's your plant and machinery cost given to you in your trial balance? 150, no? That is start of the year. So from that 150, what is the cost of the plant you are selling? What's the cost of the plant you are selling? 32. So when you dispose a non-current asset, what do you have to do? You have to remove it from your non-current asset cost, right? So your total cost of plant and machinery is 150,000. From that, you need to minus how much? 32,000. They have not yet entered the disposal. So you have to minus that asset that you are disposing. Got it now? So the total cost is 150. From that 150, take out the cost of the asset you are disposing, which is 32. So next to that 150,000, you minus 32. Clear? Right. Then that asset was depreciated by how much? What's the total? 6,000. Second adjustment. The asset that you are disposing, how much have you depreciated? Adjustment 2. That's given 6,400. So when you dispose an asset, what should you do with that depreciation? We have to remove it from the provision for depreciation, right? Because the asset is going off now. So whatever the depreciation, also you have to remove it. So what's the total depreciation given? For plant and machinery, 1st of April, accumulated depreciation, how much is given in your trial balance? 60,000. So from that 60,000, you need to minus how much? 6,400. You need to take out the depreciation of the asset you are disposing. So from the total cost, we are minusing the 32,000, the cost of the asset we are disposing. From the total depreciation given, we are removing the depreciation of disposed asset, which is 6,400. Are you there? Right. So that's adjustment 2, and we have already worked out the profit or loss on disposal. So we have taken the loss and we minused it from the profit. The loss on disposal is already considered. So that's adjustment number 2 done. Right. Okay, clear? Now the third adjustment. Third adjustment, they have told you how to depreciate for the year. What are the depreciation given? Annual depreciation is calculated at the year end as follows. Leasehold factory, you have to take 2% on cost, some doubt, Monopa? Yeah, loss is 1,600. That you minus it from your profit, loss on disposal. Okay. Right. Then the third adjustment. The leasehold factory, how many percent you have to depreciate? 2% on cost. So they have not yet charged depreciation. So what do you do? Depreciation, you have to minus it from your profit, right? Depreciation, this is for the factory. Leasehold factory. How many percent should you depreciate? 2% on cost. So look at your trial balance. What's your leasehold factory cost given? That's given how much? 400,000, no? There are no additions, there are no disposals, nothing. So on 400,000 itself, you take how many percent? 2%. So that's how much? 400,000 is the cost into 2% depreciation. That's a total. No? Here we are trying to find the income statement amount, the profit for the year. No, we are trying to find. So only this year's depreciation. Totals you take where? To the balance sheet. Okay. So here the depreciation for leasehold factory is 8,000. So you minus that from your profit. 400,000 into 2%. Only 1 year's depreciation you have to take. Right? Then plant and machinery, how are they depreciating? 20% reducing balance method on the net book value. Okay. Here there should be one more sentence here saying that year of purchase full year's depreciation, year of sale no depreciation, because the date of purchase, disposal, nothing is given. So here you have to assume that in the year of purchase full year's depreciation, year of sale nothing. That should be mentioned in the question. I have not mentioned that. So here we are trying to find full year's depreciation, not monthly basis. Okay. So if you want, you can write it down. Year of purchase full year's depreciation, year of sale nothing. If you think you will forget, that's not mentioned there. So that means in the year that you are buying the asset, take full year's depreciation. In the year that you are selling, we are not going to charge any depreciation. Right. Now, how much is the depreciation charge for this year? Plant and machinery, you have to depreciate 20% reducing balance method. So now tell me, what's the total cost now of plant and machinery? After the disposal, what's your cost remaining? Look at the trial balance. 150, we minus how much? 32. Yeah. Yeah. And there is additions also given. See, additions in the year plant and machinery, they have given 20,000. Additions means they have purchased the new plant and machinery for how much? 20,000. So what's the total cost remaining then? So this is plant and machinery depreciation. What's your total cost? That is 150 minus 32 plus 20. Total non-current asset, you minus the disposal 32. Yeah, add the addition. So 20. Yeah. So then you will get 138,000. Yes. That's your total cost remaining end of the year, right? Yeah. So that's your cost. No. Can we take depreciation on the cost? You can't. We have to take depreciation on the net book value, right? So from 138,000, the total cost minus your total depreciation. First, find your net book value. So what the depreciation should be minus? Accumulated depreciation already given how much? 60,000. From that, we minus that disposal depreciation 6,400. So what's your remaining depreciation then? 50. That's 60,000 minus 6,400, the disposal depreciation. So your remaining assets depreciation is how much? 53,600. Yes. So the total cost remaining is 138. The total depreciation balance remaining is 53,600. So what's the net book value of these remaining assets? How much is your net book value there? So 138,000 minus 53,600 is 84,400. Understood how I got the net book value? So on that 84,400 only, you have to take how many percent? 20% depreciation for the year. So that's how much? What's your depreciation? That's 84,400 into 20%. That's 16,800 880. 16,880. Yes. So that's reducing balance method depreciation for plant and machinery for the year. Yeah. So that's depreciation calculation for the year plant and machinery done. Right. Then that's adjustment number 3. Adjustment 4. What do you do? What is that? A final dividend of 20 cents per share was proposed 31st March 2011. That is this year. They have proposed some dividends. Do you take that? No, that will be taken to the next year. So you can ignore this. Adjustment 4. It doesn't come in your financial statements for this year, right? Done? Okay. Adjustment 5. That's tax, no? Estimated tax for the year. So that's an expense, right? So what do? You have to minus it from your profit. So tax, so that's adjustment 5. Taxation, that's an expense. So you minus 20,000 from your profit. As well as where else do you take this tax? It's not yet paid. So current liabilities. You have to take it to the balance sheet also, okay? It's given as an estimate. So expense, we minus it from the profit, and also remember to take it on the current liability. That's your taxation. That's adjustment number 5 done. Adjustment 6. During the year, 100,000. This is issue of shares, no? What are they saying? During the year, 100,000 shares had been issued. The share issue has been accounted for. So anyway, this is issue of shares. Does it affect your profit? It affects your share capital and share premium. No, it doesn't affect your profit. So profit, that's it. All the adjustments we have considered. Okay, so now what's your corrected profit for the year after considering these adjustments? First, get the corrected profit. So I will come to that last adjustment. I'll explain that. So ignore the last one. That doesn't have an effect on the profit. So what's your final corrected profit for the year? $169,520, correct? Same. Calculate. Mental calculation or calculator calculation? Calculator, okay. Yeah, okay, no? Fine, correct. So that's profit for the year done. So now we know the corrected profit. No? So we can do our statement of changes in equity. So let's do that. You can put the heading as statement of changes in equity. As at 31st March 2011. That's your year end. 31st March 2011. How many columns? How many items? Share capital is given, share premium, retained earnings. No general reserves, no revaluation reserves, nothing. So only again 3 columns and a total, right? So you have ordinary share capital, then share premium, then retained earnings, and then total. Okay. Right. Now we start with the balance brought forward, share capital balances, balance brought forward, opening balance. Okay. Now tell me, how much is share capital given to you in your trial balance? 400, no? Is that the opening balance or the closing balance?
Closing.
How do you know?
This 31st.
Because the trial balance is given on 31st March. Now, yeah. So in the same trial balance only they give you opening stock also. No? In the same trial balance only the accumulated depreciation is given 1st of April. No? So not everything given in the trial balance is the closing. So this share capital 400, this is again, I have taught you all this in the AS level also. How do you see if, yes, very good. How do you see if this opening, if the share capital and share premium, if it is the opening balance or the closing balance, how do you decide that is not from the trial balance? You have to decide it from your adjustment. Read the adjustment. What are they saying? That 6th adjustment about share issue. What did they say? Yeah. During the year, 100,000 shares had been issued, right? So they're saying during the year, you have already issued 100,000 shares for 1.10. That's a selling price. The share issue has been accounted for. What does that mean? It's already entered. So that means during the year, they have issued shares. And if they say that it's already entered, that means the share capital and share premium which is given to you should be the closing balance, right? Because the share issue is already recorded. Do you understand what I'm saying? But in the same adjustment, if they say that during the year 100,000 shares were issued, this has not yet been accounted for. If they have not recorded this, that means the share capital and share premium is what balance? Then it's the opening balance. Here the share issue is already recorded, so it's the closing balance, right? So you can't take this 400,000 share capital, 15,000 share premium, that's the closing balance because the share issue is already recorded. So we need to find the opening balance of the share issue. So what I will do is, first I will take the issue of shares, and already closing balance is given to you now. So the closing balance given to you in your trial balance, the share capital balance is given 400,000. Share premium is given to you 15,000. That's a closing. Okay. So if you can find the share issue, then you can do a backward calculation and find the opening balance. Correct? Okay. Now tell me, from that adjustment 6, how much goes to share capital? How much goes to share premium? How much goes to share capital? How much goes to share premium? How many shares? 100,000 shares, no? What's the par value? Yeah, here, this in the trial balance, ordinary share capital, $1 each. Take the par value as $1. That's not mentioned, so you have to, it should be mentioned there as $1, okay? So par value is $1. Then 100,000 shares, they have sold it for how much? 1.10. Then how much is share capital? How much is share premium? 100,000 shares into $1. That's share capital, right? And what's the premium they have charged for each share? 0.10 premium, no? $1 is the par value, means selling price is 1.10. So that additional 0.10 is your premium. So 100,000 into 0.10, what should be the share premium? 10,000. So 100,000 should be added to share capital, 10,000 should be added to share premium. Is that understood? Yeah. So from that issue of shares, 100,000 should be added to share capital, 10,000 should be added to share premium. In total, what's the cash you got? 100,000 into 1.10. So in total, you would have got 110,000 cash. So out of the 110,000, 100,000 is share capital, 10,000 is share premium. Okay. So now, if you know the issue of shares, can you find the opening balance? What should be the share capital opening balance? That's 400,000 minus 100,000, right? So your opening balance share capital would have been 300,000. Okay. Then share premium 15,000 minus 10,000. Your opening balance should have been how much? 5,000. So that's how you find the opening balance, because they have already said that the issue of share you already recorded. So whatever that's given in the trial balance is the closing balance, right? Yeah. So that's the adjustment number 6. So the share issue is accounted for. After that, now the retained earnings. So share capital, share premium done. Retained earnings, look at your trial balance. In your trial balance, how much retained earnings balance given? That's given to you, where is that? Here, third item, retained earnings, 1st April. That's the opening retained earnings. See, start of the year, that's 122,000. So that's your retained earnings brought forward. And to that, what do we normally do? If you make a profit, we add the profit for the year. What's the profit we got? We now found the corrected profit, right? That's the first working we did. How much corrected profit we found? 169,520. So that corrected profit only you have to add it to retained earnings. So that's 169,520. So opening retained earnings is given at the profit for the year, the corrected one. So now you understand. That's why we had to do that working first. Anything else? in your statement of changes in equity? Anything else do you have to consider? Do we have any dividends to minus? Look at your trial balance. What's your dividend paid given? There's interim dividend paid. No final dividend. So in the trial balance, the only dividend paid given to you is how much? That's 5,000. That's all. There are no final dividend paid. So that 5,000 you minus it from retained earnings, interim dividend. So deduct 5,000 from retained earnings. Okay, so now get your closing retained earnings balance. How much? 286 520. 286,520. That's your closing retained earnings. So all these closing balances goes back to the balance sheet under equity. So in your balance sheet, you know how much is the share capital, share premium, and retained earnings. That's formed. Okay, done. So now we have all the workings. We'll quickly do the balance sheet also and see if it's tallying. So now for your statement of financial position, under non-current asset, we have to directly enter property, plant, and equipment, right? All the non-current assets together. No? So first we need to find all the net book values, right? The closing net book values. Then only we can do the balance sheet. So for us to do the balance sheet, first we need to find the non-current asset. Okay, I'll first put the format. So statement of financial position. As at 31st March 2011. So you start with non-current assets. And the first item should be what? Property, plant, and equipment. There are no intangible assets given here, right? In your trial balance, yeah, no intangible assets. So you can directly enter property, plant, and equipment. Yeah. How many non-current assets we had? 2. So tell me, what's the closing net book value for the leasehold factory? What's the closing net book value for the plant and machinery? That you have to find it separately and take the total here. Okay, first, the leasehold factory. How much is the cost given? What's your cost? 400. There were no additions, there were no disposals. So that remains the same. What's the accumulated depreciation given? Yeah, that is on which date? 1st of April. That's the opening depreciation brought forward. So if you want the closing, what do you do? To this 152,000, this year, how much did you depreciate? In the profit calculation, we already took that. Depreciation for factory, how much we got? 8,000, no? This year. So what will be the total depreciation then? 152 plus another 8,000. 160. So that means what's your closing net book value? From 400,000, that's a total cost. You minus the total depreciation end of the year, 160. Okay, that's the opening depreciation plus this year's depreciation. So 400 minus 160. What's your net book value end of the year? 240, no? 400 minus 160. 240, yeah. So that's your net book value for what? Yeah, that's for plant and, sorry, that's for your leasehold factory. That's one non-current asset, okay? Same way, what's your plant and machinery net book value end of the year? What's your plant and machinery net book value? That one, see this working, that we have already done. Okay, so Plant and machinery, what's the total cost we had? 160, no? 160 is the closing net book value, is it? Nashta, is that what you got? The closing net book value, is it? Okay. Yeah, that is. No. Okay. What's the total cost end of the year? That opening cost was 150. Make a balance 150 plus there was addition 20,000 minus disposal 32. No. What's your total cost then end of the year? How much was that we found? No, 138. That's your total cost, right? So from 138,000 only you have to minus what? Your total depreciation. Okay, so 138,000 is the total cost. From that you minus your total depreciation. So how do you find the depreciation end of the year? Already, what's the accumulated depreciation given? 60. Yeah, Nashta, you realize your mistake. So that's a cost is 138. An accumulated depreciation, the opening balance is given 60. There was a disposal depreciation we minus, no, 6,400. So from 60,000 minus 6,400 plus this year we depreciated how much? Look at the profit calculation. This year we charged an additional depreciation for plant and machinery. How much? 16,800. You need to add that also. No? So opening depreciation minus the disposal depreciation plus depreciation for the year. So end of the year, what's the total depreciation remaining? 60,000 minus 6,400 plus 16,880. This year's depreciation. So how much is your closing depreciation balance? How much? 70,480. That's your end of the year depreciation balance. Opening balance plus the depreciation for the year minus your disposal depreciation. So you will get 70,480. That's your closing depreciation balance. So from the total cost end of the year, I have minus the total depreciation end of the year. So what's my net book value then? Is it 67,520? Correct? You guys understood this? Yeah. So first, what did I do? I took the opening cost, added all the additions minus the disposal, got the closing cost 138. Then what did I do? I took the opening depreciation minus the disposal depreciation and added the depreciation for the year. Then I get the closing depreciation. Then you can find your net book value end of the year. There another. Nashta, did you understand that? Yeah. Okay. So that's 67,520. So that's your closing net book value for plant and equipment. So what's your total net book value then of all your non-current assets? What's your total net book value? Those are the only non-current assets. How much? 0. So you have to straight away put the total of all your non-current assets together. Workings and all, you have to show it separately, not here. Got it? Do you have like another 3-4 minutes, 5 minutes maximum? It's okay. Yeah. Then current assets. Inventory. To this, you have to add trade and other receivables. Trade and other receivables. So that includes all the prepayments, everything. Then your cash and cash equivalent. So how much inventory is given to you? The closing stock. It's given to you in your trial balance. Inventory 31st March 2011, 320,000. So first what I will do, I'll just put the format. Then we can take all the entries from the trial balance one by one. So you have trade and other receivables, inventory, then cash and cash equivalent. Then you can find your total current assets and you can get your total assets. Equity, of course, we have already found ordinary share capital. Then share premium and retained earnings. So this we have already found in your statement of changes in equity. Then non-current liabilities. Current liabilities. So trade and other payables and tax payable. Okay. Yeah. So non-current assets we have found. Then let's take all the entries one by one from the trial balance. First, share capital, share premium, retained earnings, we already found. What are the balances we found in the statement of changes in equity? Share capital was 400, share premium 15, retained earnings we already found. So take all those closing balances there. So share capital 400,000, share premium was 15,000, and retained earnings was 286,520. So you can work out the total equity. Just put the entries, you can total it up later. Then there's a 6% loan. Loan goes where? Non-current liability. So you say 6% loan, that's 100,000 goes to non-current liability. But that interest on the loan, we minus it from profit, right? And it was not yet paid. No. So what did I say? You had to put it on a current liability also. So this 6,000 loan interest, that should go under other payables also. Yeah, tax I show it separately. I'll come to that. Yeah. So take interest of 6,000 on the current liability. So that's loan done. Then the leasehold factory, we have already found the net book value. We have taken. Plant and machinery also, we already found the net book value. We have taken to the balance sheet, already done. Then trade payables, that goes to balance sheet. 280,000 added to trade and other payables. Trade payables done. Then accrued expenses, where do you take? Current liability again. Other payables, how much accrued expenses are given? 60,000. So added to other payables. Then then inventory, that's closing stock, 320,000. Current assets. Then after inventory, you have trade receivables, that's 200,000. Added to trade and other receivables. Then prepayments, that goes to other receivables, right? That's 160,000 added to trade and other receivables. Prepayments. Then cash and cash equivalent is 180. That's directly given. So that's current assets. 180. Then profit, we have already taken to retain earnings. We found the corrected profit that we have taken. Interim dividend, we already took to retain earnings. And sales proceed, that's a selling price of the non-current asset, right? We considered that and found the profit or loss on disposal. So all the entries from the trial balance is done. From the additional information, anything we have to take to the balance sheet. Loan interest we took. Plant and machinery disposal is considered. Depreciation is considered. Final dividend we don't consider. Tax. What's the tax payable? 20,000. So that tax also should go where? Yes, current liabilities. So that should be taken under tax payable. You take it under current liability, 20,000. Now take the totals and see if it's balancing. Yeah, last bit. I had to do it a bit faster. What did I do? I just took the entries one by one from the trial balance and put it in those relevant places. Nothing to calculate. Calculations we already did. So trade and other receivable total should be 360. Trade and other payable total should be 340, 346. See if it tallies, guys. Ow. It tallies, no? You're right, balance one right. Balancing figure. Balance 1 million. What you can read this value? 1 million 1,167,520. Yeah. Yeah, 1,167,520. Yeah. That means in Sri Lanka, if they give you the Sri Lankan debt statistics, yeah, even no chance. Take this. Huh? If you take in, yeah, convert it to, yeah, 50 billion, 50 billion multiplied by another, yeah, $50 billion. No? So multiplied by, let's say, 300 or 400. Here, 50 billion is how many zeros? 50 billion is 9 zeros. Yeah. Million has 6 zeros. Billion has 6 zeros. Trillion has 12 zeros. Never mind, it's okay. Let's stick to accounts and this balance sheet. 1 million or itself enough. Yeah. Yeah. So 2 questions done. We have 48 more to go. Yeah, just kidding, guys. Yeah, chill. Not that many, but we had to do a lot more questions on company. Not 5. There are around 15. We had to do with IAS and all. So now only we are learning to swim. Okay. God bless you guys. Good night. I will see you all again on Tuesday next week. Till then, tada, bye bye. Welcome.